Welcome back to my channel. My name is Omar, Aswat, Chartered Tax Advisor, owner and founder of ASWATAX, a specialist tax advisory firm where we get involved in all matters relating to UK taxation. In this video, we'll be discussing 3 particular benefits of group structure. Before we go on, don't forget to like, comment, share and subscribe to my channel. And feel free to visit the links below where you can book a call with me and you can find a lot more information on our website. Getting straight into it, 3 benefits. There are many more benefits of a group structure, and to be fair, I'm also going to cover one drawback or disadvantage. I think it's always fair to provide the full picture to clients, which is something that many clients thank me for. Providing the full picture is obviously what is needed to make a well-informed decision, because a lot of these decisions are not something that you do and then you reverse it a couple of weeks later. These are, from a business sense, life-changing transactions or decisions. Broadly speaking, the benefits do outweigh the drawbacks, but it has to be tailor-made to your specific circumstances. So 3 benefits of a group structure. Number 1 is actually a commercial benefit. So it's not exactly a tax benefit. We'll come to the tax benefit related to this commercial benefit. But the point being is that you can ring-fence valuable assets. Now, what generally tends to happen, and I appreciate that this is the natural course of business, whereby business owners very busy and tied up with the day-to-day running or operations of the business, and sometimes decisions are made without thinking too much about it or without taking further advice. And one scenario that we see regularly is that we have a trading company, but within the trading company, valuable assets have been purchased. For example, we might have the commercial property, so the warehouse from which the trading business trades from, or from the office which the trading business provides its services from. Or what we see as well regularly, whereby the trading business, instead of drawing the funds out as a dividend and paying large amounts of personal dividend tax up to 39.35%, which we don't advise anyone to do, and there are mechanisms available to get around this. What the business owners or the shareholders or the owners, it might be a family-owned business, for example, they start to build up a residential property portfolio within the trade. Or there might be large amounts of cash sat in the bank account, sat on the balance sheet. So I've seen some 2 million in cash, 3 million in cash is sat in the business bank account, is sat on the balance sheet. These are valuable assets, and we said the benefit is a commercial benefit of ring-fencing assets. I've just explained a whole load of things. What is the benefit? The benefit is that such valuable properties, or the cash sat on the balance sheet, or it might be valuable IP, intellectual property, it might be other stocks and share investments, fixed return investments, whatever it may be that's not directly related to the trade but it's a valuable asset. These assets are under potential threat of litigation from suppliers, customers, banks, lending providers. These assets are under potential threat of attack. What do I mean is, for example, if tomorrow, I've seen this scenario in practice, we were engaged a couple of months ago to advise on the inheritance tax planning position for a mother and her 3 children, her 3 daughters to be specific. We just have initial conversations and the rest of it. We're still working on that case, but they own farmland and we're looking at agricultural property relief and some other avenues we're exploring. But she mentioned to me herself that she had a trading business not even many years ago, about 10 years ago, and she said she had 2 residential properties within the trade, and one of the customers, they sought action against her and she lost these 2 residential properties. So just let that sink in. She lost those 2 residential properties because these valuable assets, these 2 residential properties in her particular scenario, were not ring-fenced. So what do we do? And even cash, people don't realize. So what do? We transfer, we insert a holding company, a parent company. And the group structure, broadly speaking, can be in different formats or different structure. It doesn't have to be, so most people might think a company at the bottom, a parent or holding company on top. That's right? But then sometimes you might have a parent company on top, 3 subsidiaries. Sometimes you might have a parent company on top, then you have 2 companies, and then you have another 3 companies, for example. So the structure is bespoke and is dependent on your trading group circumstances. What happens if we keep the example simple though? One trading company, a holding company, a parent company is inserted by way of a share for share exchange, utilizing the tax relief provisions whereby no capital gains tax is payable on this transaction, although by default, as in without any reliefs applied or obtained, you're selling your shares. So effectively you're the shareholder. Let's say 2 shareholders own the shares in this trading company, but maybe I should make a video sharing my screen, so on the same topic. But broadly speaking, shareholders own the shares in this trading company. Effectively, the holding company is now going to own the shares. So technically you've sold your shares to the holding company, right? So there's a disposal for capital gains tax purposes, but that's what the share for share provisions look after, and that's what we'll look after for you by obtaining a HMRC clearance. What then happens is holding company is inserted. We can usually do this within 6 weeks. Everything, which includes the legal aspects, the company's house filings, the advisory report, the stamp duty position as well. But what then happens is these valuable assets from this trading company is transferred upwards completely tax-free. Now what's happened is that if anything goes wrong with this trade, those assets belong to a separate legal entity. So although it's a group for tax purposes, for legal purposes, it's still 2 separate limited companies, completely separate legal entities. And that's the planning, that's the commercial benefit, which is warehouse, residential properties, cash. It's all gone upstairs now, completely tax-free. No capital gains tax due, no stamp duty, land tax due on the properties. Why? Because we have a group, a more than 75% group, and cash can go upstairs by way of dividends, which brings us to benefit number 2, which is the tax benefit, which is the fact that cash can be extracted via dividends tax-free. So what happens is the advice generally, instead of drawing dividends in your personal capacity paying 39.35%, what you do is you transfer the cash upstairs. The transfer of cash by way of dividend upstairs is exempt for corporation tax purposes. So dividends are broadly exempt, probably 98 or 99% of cases, dividends are exempt for corporation tax purposes, and that's the second tax benefit, whereby cash can be extracted. So now, one, we're ring fencing that cash, that can't be touched by potential litigation. But number 2 is we're stripping the trading company. We're basically preserving valuable reliefs, being business asset disposal relief, substantial shareholding exemption, and business property relief for inheritance tax purposes by stripping the cash out from the trading company. We're maintaining trading status. And benefit number 3 is that losses can be shared between group companies. So you may be the 100% shareholder, or you and your wife, or you and your husband, or you and your business partner. You are the shareholders together 100%. Let's paint a picture. We have 3 limited companies here, which is a trading company number 1, profit making, trading company number 2, profit making, trading company number 3 is, let's just say, it's a startup, loss making, heavily in loss, and company number 4 is an investment company. Now the problem at this stage is that these 3 companies, the investment company and the 2 trades, are making profits, but this company is making a loss, trading company number 3. Now if you carry on the way you are without grouping the companies, then those losses may perhaps never be utilized, because that company, just the nature of the company, for example, may be that it'll always be making losses, or it may take another 5-10 years to come into profit. But these companies are paying corporation tax, right, on their profits. So what we can potentially do is we can insert a holding company, create a group structure. Now my advice here would be that the investment company remains outside of the group. Rather, what we would do is potentially put that investment company on top of this newly formed group, so that cash can still be utilized from the trade, can go up via dividends tax-free, and then your investments continue there instead of loans. But my advice would be trading company 1, 2, and loss-making trade 3 are grouped together with a holding company, a parent company on top. And now you have a loss group for tax purposes, and the losses can now offset against the profits, and it's a beautiful situation. It's a win-win. I hope you found that beneficial. I hope you found that useful. Before I forget, the 1 disadvantage, the 2 disadvantages, is that obviously the insertion of a new company, the holding company, requires fresh set of accounts, a confirmation statement to company's house, CT 600 to HMRC. So there's that cost that needs to be balanced. Usually, it outweighs paying £1,000 for accounts per annum and utilizing massive losses of £100,000. it's a no-brainer, right? So that needs to be weighed up though. And the other disadvantage is the rules around associated companies, whereby now we have the 19%, 25% corporation tax rates. So if we have the holding company on top, that's an additional associated company, therefore reducing the thresholds for calculating corporation tax. I'll make a specific video on the associated companies rules, so don't forget to subscribe to my channel, and we shall see you soon. Feel free to reach out to me, always available for a chat, an informal chat. We can keep the ball rolling from there. We help business owners throughout their business life cycle, so it's not just on this transaction. There is so many things that we see. It might be at the start of the business, it might be accessing R&D tax credits and other reliefs, it might be implementing share schemes, EMI, growth shares, valuable employees, it may be these restructures, it might be a demerger, you might be looking to sell your business, the warehouse is stuck in the trading company, buyers don't want the warehouse, so what do we have to do? We have to extract the warehouse, and we can do this tax-free potentially by way of a demerger. So that's all part of the group restructuring. We can insert linked investment companies on top if there's different shareholders unconnected, they want to do their own investment activities rather than mixing it together. And then towards the end of the life cycle of the business, which is sale to a third party, might be an MBO, might be a sale to an employee ownership trust, completely tax-free, 0% capital gains tax, we can assist in all these matters. And then we come round again, which is the succession planning or the inheritance tax planning. So we have an asset shares which are covered by business property relief, although with the Labour Party looking to come into power in the next few months, so this video is shot in May 2024 election, outrageous and ridiculous proposals they've come out with at restricting business property relief to 500k. This is a big concern. We don't know if it'll be implemented. A lot of times they just throw things out there to see what the public reaction is, but we'll have to wait and see. We just have to be careful in what we're doing. As I say, inheritance tax planning is the end of the life cycle, and working personally with the shareholders. Speak to you soon, and hope you have a great day. Bye.